It's a new trading week and the same themes do prevail. We're seeing the U.S. equities come off earlier session weakness, but we do have the Fed Symposium at the end of this week. So joining me now is Keith Bliss of Cuttone & Company. Keith, great to have you here today.
Thanks, Remy. Always good to be with you.
Well, it is solar eclipse day, but we're seeing a U.S. equity slightly off earlier lows. Now, in terms of fundamentals, it is fairly quiet. Earnings season is over. So given that we have a lot to focus on in the way of politics and geopolitics, what do you expect to see in the markets this week?
Well, a lot of it's going to depend upon the noises that we hear coming out of the Fed meeting, the big conclave that they're having out of Jackson Hole this week. So I think we're waiting to hear some details about that. Certainly, the Fed made we saw in the minutes they're not satisfied with the pace of inflation. Will that stop what they're doing? Are they on pace to have another raise by the end of the year? The market doesn't think so at this point in time. So I think that's what we're gonna focus on. Earnings season, by and large, was pretty good. If you look at the market in aggregate, so we're satisfied with that. But like we saw last week with some of the chaotic trading and the selling pressure that we had, the market is walking on a knife's edge at this point in time, and if we don't get the right signals, the right messages, we could see it pull back a little bit. As you also alluded in your question, when you have political craziness going on here and some risk along those lines, it will tend to have people just kind of take a step back from the markets, and that's what we're seeing right now.
And Keith, indeed, we'll continue to monitor headlines to see if there are any breaking news that could affect the global markets. But when it comes to technicals for the averages that you're watching, what are they?
Well, again, like I said, we're oversold across the board. So for me, a neutral inside of the S&P 500 would be around 2480, 2485. So I would expect it to trade back there and get back there. It may take a couple of more days than typically happens. Our oversold readings came in last Thursday, and sometimes those things can take 20 to 25 days to work off. So we could be in this, tight range here for a while. The Dow, I would see getting back above 22,000, the Russell 2,000, then back above 1,400. The good news is even with the selling pressure, none of the indexes, even though they've traded down below their daily moving averages, some of them, like the Russell's now back below 50, 100, and 200-day moving average. They've not broken any of the long-term trend lines that we have going all the way back to 2007 when we hit those lows. So as long as we can maintain that form and maybe get a slight reversal, maybe keep Donald Trump's Twitter feed and the noises out of Washington quiet for a while and get some soothing tones out of Jackson Hole, I certainly would expect this market to turn around.
And Keith, before I let you go, I know you monitor interesting relationships. So given what we're seeing in commodities, what are you watching right now?
Well, right now, what I'm really watching is something I always keep my eye on, but it really reared its head for me last week, is the dollar-euro pattern. Okay, so the dollar was migrating towards being overbought and the euro was oversold. Typically, that's a weak pattern for U.S. equities. So right now, the dollar is off today, so some of the pressure back. But if we see the DXY, which is the index traded against a basket of securities, you see the DXY trade up around 96, and you see the euro come back down and around the 122, 123 range. That will be weak for U.S. equities, and in a large majority of the cases, that will pull back. So those are the two levels. Look at the dollar-euro pattern for clues of where this market's going to go.
Okay, Keith, well, thank you so much for weighing in on the broader market, and thanks for your insight as always.
My pleasure.